And that's it for my radio show today, and I will see you on the charts. Hi, I'm Phil Grande of philsgang.com. I want to take a few moments and visit with you, talking to you about a great opportunity, the stock market. I know a lot of you look at the stock market today and say, I don't want anything to do with the market. Sometimes I don't blame you. But it's like anything else. If you have the tools, you're fine. The market is different today than it's ever been because it's controlled by what we call financial engineering. That's the Federal Reserve. They control the market when it goes up. They control the market when it goes down. But that's the good news because with them controlling the market and with today's technology of my charting, we can identify if money is going into a particular stock, into a particular sector. Notice what makes a stock go up or a sector of stocks go up is institutional money, not the retail customer. It's the institutions. When JP Morgan buys or when BlackRock buys, they buy huge amounts of stock. So with the technology we have available to us today, we can track any stock and we can track the owners of that stock as they put money in and take money out. That's a great advantage. That's so much better than what we used to have to do when we were buying based on fundamentals. In fact, when you bought on fundamentals, you had to go and get a broker. You had to go get a professional because before you bought a stock, you had to know all kinds of technicals. You had to know what the margins were. You had to know what the PE ratios were. You had to know about inventory. You had to know all these financials and technicals, and you just couldn't do it on your own. So we had to go to a broker, stockbroker. Well, thank God today that's different because you don't need them. Now, I'm not putting the industry down. I'm just saying you don't need them. Because remember, today, they have no fiduciary relationship to you. That's right. They don't have any obligation to you. The obligation is to themselves and to their company and to their shareholders. We've tried several times to put it in the law. The financial planners, these money managers, 401k managers, would have a fiduciary relationship with us. It doesn't work. In fact, we see more and more in the news where 401ks, companies are being sued by their employees. And why? Because of unfairness, expenses. They take 62% of your money. That's right. When there's a survey, it always shows about 70 to 80% of people in 401ks have no clue that there's any expenses. They don't believe there isn't. Every survey says 80%, 70% didn't think there was expenses associated with their 401k. What a mistake that is. But I don't want you to think because the market is financially engineered, that's something bad. It's something good because everything is technology today. Now, what we try to do is to take you and train you to use a certain tool called the PT2 chart. The PT2 chart is wonderful. It's a simple color-coded chart. Let me show you. This is the PT2 chart right here. And on the PT2 chart, it tells us when money is coming into the stock and money is coming out. And if you take a look, you can see right here, this was a signal when it turned from green to red that the money was coming out. That means the companies, the institution that own this, who invested in, I'm not talking retail customers, I'm talking about BlackRock, JP Morgan, the big companies that own this, they own most of the stock. Today's technology, when they pull their money out and the stock starts going down, we can catch that. It tells us when it turns colors. And that's what we get. So you can see GEO has dropped all the way down, which means that you would have made about a 35% return. This right here is what we call a confirmation. We never begin shorting a stock unless we have that confirmation. It has to match here. When that crosses and that matches, that means money's being pulled out, it drops. And as long as it stays red, you keep shorting it until it crosses back the other way. This is the indicator they're putting money back in. Notice they didn't put money back in here as it started to go up. They waited until it got to this area here. The beautiful thing about this, however, is if you're going to buy a stock and it turns green, you can put in what we call a stop, a simple stop. It's S-T-O-P, just like it sounds, a simple stop, okay? So I can take and put in a stop at $35, saying I am going to buy X amount of shares. And I don't want to risk more than $100 or $200 or $50. I can actually set my own risk to my reward. I never have to worry. You think your broker will do that for you or your plan? Of course not. So once the stock starts moving up, I can move up my stop all the way with the stock, all the way up. So I can guarantee, as that stock keeps going up, I can guarantee myself I will never have, I will never have a loss that's out of my control. When you're with a broker or planner, how many times do you call and say, what should we do? What should we do? Those days are gone. When it turns red and it crosses back over, then what you should do, and it crosses back over and this turns red, that means the institutions are taking their money out. Remember, institutions spend a fortune in research that we have no access to. We don't. So all we do is have, through technology, we don't have access to their information. We have access to money flow. And we can see their money is coming out. And then we turn around and short it when it crosses back over. This is a wonderful tool. We also can do it. Many people will decide to do a bucket of stocks, the spiders, the S&P 500, SPY. This is much better, okay, than being in a 401k. This is a basket of the 500 best companies in the world. Same thing. When it turns green, you buy right here. When it turns green, you buy. And when it turns back to red, you short. So believe me, there's nothing better than this technology. Here's a stock we recently sold short. It turned from green to red. Here was the crossover. We had a beautiful run all the way down. Now we're waiting for it to turn green, just like another stock we just bought. This was a stock, a company that builds prisons throughout the country. And it had a 25% drop, which we could have shorted it. Or if we decided just to buy it, it just turned green. It had the crossover, turned green, and we bought it. What control do we have? That's beautiful. So today, no longer today do you have to depend on a broker. Because why? Because a broker has no fiduciary relationship with you. Their loyalty is to themselves, to their company, and to their shareholders. That's the law. They don't have to have any loyalty to you. So this way, you're in control. And the thing that you control the most is how much money you're going to lose by putting in a simple stop. It's that easy, okay? That easy. Check it out. Go to my site, philsgang.com. It's $49.95. Join the gang, and all we ask, if you're doing well, is please donate to St. Jude. So there you have it. Join my gang. Try it for a month, $49.95, and I'll bet that you're going to be so happy with it. It's so easy to do. And I will see you on the charts.